Hello, everyone. Good morning and Happy New Year. Welcome to Inclusion for All Radio. On this platform, we have proper conversations on equity, conversations on access, and also opportunity. I'm glad you joined us today to listen. I'm your host, Oluchi Okafor, and I'm the Brand and Communications Manager here at EFINA. So, let me start with something very simple. For many Nigerians, especially the poor, rural and informal users, using financial services it's not just about access for them. It's more than that. It's about what actually happens after they've handed over their cash and after they have trusted the system. And to be honest, Nigeria has made a lot of progress, more people have bank accounts now. More people are using digital channels. But then when a transaction fails and the money doesn't come back, what happens? When charges show up that they never expected, or when fraud happens and there is no clear path to redress, or even when they follow a certain path and they run into some kind of obstacle, at that point, progress begins to feel a bit fragile. And the A2F 2023 survey report tells us that there are millions of users who still struggle with unclear fees. They still struggle with failed transactions and even limited understanding of the products that they're using. This means that they've bought something or they're using a financial service product that they don't really know much about. And it's a cause for concern. Now, if you come to rural areas where information, proximity to bank branches, and protections are generally weaker, these experiences can be damning because it can quickly turn people away from the formal financial systems that we've been working together to bring them into. And so in today's conversation, it's going to be about the quality of services that people receive. It's going to be about trust. It's going to be about confidence. We're going to learn more about what the people at the margins are experiencing, what is missing in how financial services products are delivered to them, and what must change if we want inclusion to go beyond numbers, to include dignity, to include safety, and to include real value for everyday Nigerians. Now, to help us discuss this today, we are joined by the one and only Professor Chiso Ndukwe Okafor. She's the Executive Director of Consumer Advocacy and Empowerment Foundation, CADEF. CADEF is an organization that, since its establishment, it has served as a collective voice of the average Nigerian. They've served as the link between the consumer, the producers, manufacturers, and even regulatory bodies. Professor, we're honored to have you on the program today. Thank you for joining us.
Thank you so much for having me.
Okay. Now let's start with an icebreaker question. Do you remember the first time you had a consumer protection related issue with any financial service? If you do, can you please tell us about it?
Well, yes. When you say first, my first experience outside the country was when I had a transaction pop up on my account that wasn't initiated by myself. So I quickly called the customer service, and immediately they put a hold on the transaction. And what they now did next was to reverse it automatically while they investigated it. Now let's come to my first experience in Nigeria of having such a transaction that popped up. They said it was a failed transaction, that I had sent money to somebody and it was failed. And so it took almost 3 weeks between the person's bank talking to my bank and me calling everybody that I've sent this money, but the person hasn't received it. And their bank told me that I had to go to my bank to put a trace. And when I went to my bank, which is supposed to be a tier 1 bank, they told me I have to call the person's bank to find the trace. And it became ridiculous. And of course, I had to resend the money using another account while my bank figured out what went wrong. So the failure was as a result of the provider bank and the receiving bank not being able to talk to each other. But the burden was put on the customer and the consumer, which didn't make sense to me.
Thank you so much for sharing that with us. And you are absolutely right. We have seen this happen over and over again, where there is this communication gap between financial institutions, and the ultimate burden rests on the customer to make sure that they get their money back eventually. I will then go into my first question. From your experience with CADEF, what typically happens when a poor or rural user faces a failed transaction, unexpected charge, or loses their money in a way that they cannot explain, say fraud or any other way? What does this tell us about how the system currently serves or even fails low-income users and people within the rural communities?
One thing I know for sure is what I would call the poverty in digital finance, poverty penalty in digital finance. Because of what we just talked about a minute ago, the consumer is faced with the burden of proving the issue rather than the provider. The consequence is that consumers have found themselves in a liquidity ratio. For a rural consumer, we're talking transactions as low as 2,000 naira, 5,000 naira, which is probably the money they have for the week, or if they're doing a business, the money they have to conduct their business. So now, once there is a failure, their money is in limbo. There is a penalty on them. The expectation for them is to find a financial institution, which most of the time in rural communities can be anywhere from 10 kilometers to 20 kilometers away. A person from a rural community. The debit alert, no value, is one issue. We're talking of people in the community where their average is maybe 2,000 to 5,000 naira that they have either for their business or to make market runs. And so what happens is when a failure is experienced, the burden of proof is on the consumer. Their money is now in limbo, what you'll call liquidity limbo, because they don't have access to their money. They're working with probably a POS agent that they have to go to location to try and do business with. The money is not accessible. The burden is on them, and they have to wait anywhere from 48 hours, 24 hours to 72 hours. So what happens? They're expected to go and fill out a dispense error form. Most of these rural areas don't have a bank that is near them, anywhere from 10 kilometers to 20 kilometers away, which means they have to pay transport to go make a complaint. And a lot of times it just forces them to abandon their money. They even have illiterate users often use USSD phones, which means they don't even able to do screenshots of a failure. Burden is still on them. And this just makes it impossible for them to trust on our financial systems. So these kinds of barriers forces them to return to cash. Let me just put all my cash in a bank. Agents issues. What if the transaction fails Agents will not give you money if the transaction says it's failed, even though the money might have gone through. So users just downgrade their using. They just said, forget it. I will wait until somebody brings cash to me, or I have cash to do the business that I need to do.
Thank you so much, Professor. You have shared a very insightful detail with us. And the fact that when you consider proximity, it's usually not in favor of people who are in these rural communities. And then when you now top it off with the challenges and the failed transactions, the money that they're losing to fraud, it definitely constitutes a huge barrier for them, and not just for them, but possibly for others around them who they might tell about their experiences as well. Thank you so much. Now, building on that, I'm curious to hear your thoughts on why these challenges tend to affect them the most, affect the poor, the non-literate more than others, even as digital financial services continue to expand.
I would say because the system originally was not designed with them in mind. It was not designed with the poor and the illiterate in mind. If it was designed with them in mind, they would have been what you would call a mandated rapid reversal. So, and secondly, there's no automated enforcement. If it was an automated enforcement and thinking about, it's a design process, but a lack of design process. It wasn't, if you remember when the banking in Nigeria started, they weren't thinking of the poor people. They were thinking of all those people carrying money in Ghana must go bags. So the design process was, let's get these people, let's get their money from under the bed into the banks. Even the design of the banks, you had an area where people would come in with their big bags, a lounge area. It wasn't designed with the poor people. It wasn't designed with people with disabilities in mind. And so the gap is a strict liability framework where the provider should be presumably liable for failed transactions rather than the consumer. If the design was thought out properly, the original design, so it's the providers are trying to play catch up, and they don't believe there's an incentive for them to play catch up really fast because of lack of enforcement or slow enforcement. Excuse me. The issue of policy versus reality. CBN has a very robust guidelines on dispute resolutions and reversals, but there's no automated enforcement. There's no liability, major liability on behalf of the on behalf of the providers. So if there was a liability requirement where there is a penalty on the providers, a major penalty, by now they would have had a USSD panic button that you can complain without using your data and without you using your time. You just push a button. And of course, the other issue is everything was designed with English. And most people in the rural areas illiterate, English illiterate. They might have, there's nothing on Hausa, Yoruba, or Pidgin to navigate, even when you're online trying to navigate a loss, a complaint. Messages are very technical. Why tell me issues of switcher malfunction rather than saying bad network, reversal coming in? Do you understand? The issues of hidden charges. The issue and the challenges come from a design thinking process. The original design process, I strongly believe, of financial providers is because they did not know understand and know their customers, all their customers. I believe they were thinking about the rich and literate customers in the design process. If they were thinking about the entire spectrum of their customer base, which includes both rural and illiterate, English illiterate customers, then their design thinking would have included using USSD app interfaces where a user can navigate between the three major languages of Pidgin English, but as well as being able to have a push button, a USSD push button to say fraud or money did not go through button. And the hidden charges, maintenance fees. Why are you charging me an SMS a lot to tell me that my money has gone through or not gone through? It makes no sense. The providers designed systems to benefit them and them alone, and not for the entire spectrum of their customer base.
Thank you very much, Professor. You've touched on a very important point there, which is the design flaw. And due to this flaw, the financial service providers are continuously playing catch up. Now, because of this catch up, it's inevitable that these negative experiences will continue to occur. And I want to find out from you, how do these repeated negative experiences shape the trust and long-term usage of financial services among these groups of people?
I would say that there's a loss of trust. Automatically, what it would do for most people is to go back from, quote unquote, the cashless society that Nigeria desires to going back to hoarding their money under the mattress. They now see financial institutions more than a gambling institution rather than a financial service institution. Users are going to downgrade. That's the short of it. What I mean is if they receive their money, they'll cash out and hold on to their cash. They wouldn't want to leave it in the bank. I know we have the agent systems. Of course, agents that are in the rural communities, when a transaction fails, they're going to blame the agents, and this causes community conflicts. And so sometimes they will just bypass an agent. They might go to a businessman that does business in the community that they trust, that of course will charge them a fee. But cashless Nigeria is not going to happen anytime soon with this kind of erosion of trust.
Thank you so much, Professor. Thank you. Now, let me take this a step further and ask, what gaps exist today in consumer protection frameworks, redress mechanisms, and enforcement that leave poor and rural users exposed when things go wrong?
I think the major gap is policy versus reality. That's what I would call it. The policy is in place, but the reality on ground is totally, does not adhere. Like I mentioned before, if we don't have a system, an automated enforcement system, where the system switches the burden of proof from the consumer to the provider, then that is where I see a gap, a major gap. We should move from a consumer, burden of proof on a consumer, to the provider. Once it switches to the provider, trust me, the provider will sit up to make sure things are in place to minimize such failures. The language barrier is also a burden, and we need to find out how do we make it better. Service provider innovations. Providers should not wait till things are, regulation are in place and then they're forced to make changes. The provider should come from a place of being a service provider and saying, what do I do to make it easier for my entire customer base?
Thank you so much, Professor. Thank you. You have shared a very strong point with us, which is having an automated enforcement system that is going to help people within these segments. And I want to ask just one question on an assumption that we have heard repeatedly, and that is the problem about lack of information. Unclear charges, confusing messages, and language barriers. And I won't even call them assumptions at this point. I would call them a fact, because the Access to Financial Services survey has also told us that millions of customers, former financial services users, say they don't understand what they have, the products that they have purchased, the services that they have signed up for. And so this is an actual problem. There are unclear charges. People complain about receiving charges that they didn't even know existed in the first place. And I want to ask you, how can communication be made simpler and more inclusive? I've heard you speak about making it more inclusive in terms of the diversity of language used, Pidgin, the 3 major languages, and also English. Are there other things that you can share with us around communication on how it can be made simpler and more inclusive for these segments?
I think so. What I would call standardized literacy. We have to move beyond literacy, which really is how to save and how to navigate, into more education on how to complain. People need to know their specific rights and make sure that they are understand that they are refunded within 24 hours. I would even push it, a refund mechanism. I know the law is 24 hours now, but a refund mechanisms of 60 seconds. If there is the regulators should mandate that if a transaction is not marked successful by the receiving switch within 60 seconds, then the bank must automatically reverse the funds like they do in most other countries, and let the burden of finding what happened to the fund be on the provider and not on the consumer. So we need to move from how to save to how to complain, and then do a 60-second, I would say 60-second mandatory reversal, so that the provider now is the one to find where the money is hanging. The impact would be that the fear that my money will hang or that transaction has failed will be minimized. And, we do have English and Pidgin language, but make sure it's really simple English, with an automated reversal guideline boldly shown on people, on the literature. The CBN cannot be the only institution because Nigeria is big. So CSOs, consumer agencies such as ours or yours, should be empowered to make sure that the rural areas. I was having a conversation with some of my staff. I have CADEF, we work with staff from about 7 different, from actually the 6 geopolitical zones. And so I was having conversations with some of them, and they said, oh, we have no bank in my village. It's 20 kilometers away. We tend to use family agent system, which is another 2 kilometers away. And so once they get cash, they try to keep cash amongst themselves and use it because they don't complain. They have nobody to go to complain to. So why can't banks leverage community like the AJO system, empower agents with a liquidity insurance? There are just several things we can do to increase the financial inclusion amongst the poor and the illiterate in the rural areas.
Thank you so much, Professor. I absolutely agree with you. Now let's look at this from the perspective of financial service providers. What could be done differently in terms of customer support to reduce these risks for vulnerable users?
From the provider's perspective, they have to design interfaces that are easy to use, that speak local dialects, that are not text heavy. Secondly, they also need to maybe have color-coded screens, greens for successful, red for fail. I don't have to read sentences that I don't understand. Like I said, they can do their agent management. They can extend overdrafts to agent to cover dispense errors so that agents can pay the customer immediately while the bank settles in the back end. Zero data compliant channels, free USSD codes. They should actually remove the 50 naira or 100 naira they charge to send credit alerts or debit alerts. All those things should be done. They should look at know your customer. The entire spectrum of their customer base is a major thing they do. What normally happens, they design, they bring it out to the consumers, and then they see complaints. Like one of the major banks says, oh, we have this complaint side, we use AI. I don't care. Personally, as a rural consumer, I do not care about all those things. But if they thought about me and are thinking about me in their design process, don't you think by now they should have changed? But they keep playing catch up because the rural community, the rural consumer, the illiterate, is not their priority. That's my belief.
Thank you so much, Professor. Thank you so much. You have shared very insightful recommendations so far during this conversation. And I want to just take a moment to highlight a few of them. And the first is that the burden of proofs should move from the consumer to the financial service providers, because then they will prioritize the consumers and they will be sure that their experiences are better. And then the next is the automated enforcement system. You spoke about a 60-second mandatory reversal if the receiving bank does not confirm the receipt of funds. And we also have, where you mentioned standardized literacy, we need to move from how to save or how to navigate the service into education on how to complain and how to ensure that your complaints receive attention and they are eventually resolved. We also, you also made recommendations around the use of language, the use of English. It should be more inclusive. It shouldn't just rotate around the literate consumers who can read and understand English. It should be translated to local dialects and Pidgin English, which is something that the informal sector is more accustomed to. You also mentioned the use of non-technical English, really simple English, with automated guidelines shown very boldly. You also mentioned that we need to support the Central Bank of Nigeria, because Nigeria is a huge country, and so we cannot leave that responsibility to the regulator alone. Civil service organizations, consumer agencies, everyone should be empowered to make sure that the experiences of those at the margins get better. Thank you so much for sharing this with us. Now to my last question. I want to ask you directly, if you had to prioritize just one policy or regulatory change that would most improve protection for the poor and rural users, what should it be and why?
I would say the mandatory instant reversal. Because the current friction we're experiencing actually relies on reconciliation, which means the banks talking to each other, which takes time. So if the regulators mandated a transaction, if a transaction is not marked successful, then by the receiving switch, then the sending back must automatically reverse the funds to the customer immediately. I think that would actually be the one thing that would ease the burden on the rural consumers.
Thank you, and thank you so much, Professor, for sharing these insights and experiences with us today. Now, we have come to the end of today's program, but before we close, it's very obvious that something has stood out throughout the course of this conversation. And that is that inclusion should not end it does not end at access alone. It shows up in what people experience when they use financial services. And for the poor, for the rural and non-literate users, failed transactions, unclear charges, even fraud, they just don't cause inconvenience. They shape the way they interact. They shape the way they trust and also determine whether they will stay within the system or just walk away from it completely and depend solely on cash. And so if financial inclusion is going to work in Nigeria, especially for the vulnerable and the people who are at the margins, then we have to prioritize quality, the quality of service that they receive. We have to prioritize clarity, especially around communication, and also protection, because these things matter just as much as reach. And to our listeners, thank you so much for listening to Inclusion for All Radio. You can listen to this episode again on all Inclusion for All and EFINA social media platforms. My name is Oluchi Okafor, and this is Inclusion for All Radio. Until next time, let's keep centering the voices and experiences that truly define inclusion. Thank you very much and enjoy the rest of your day. Bye.